we are required to calculate earning per share from this information. The information here includes equity share capital of rupees 5 lakh, and it is given that each share is of rupees 10. Then we are given net profit before interest and tax. Remember, it is before interest and tax, that is 3,50,000. We are given 10% debentures of rupees 5 lakh and the rate of tax is 50%. So students, net profit before interest is given. Net profit before interest and tax is given to be rupees 3,50,000. Out of this we will deduct interest first up. The interest is given to be 10% of 5 lakh, that is the value of debentures. So 10% of 5 lakh, which comes to rupees 50,000. So the balance is 3 lakh and we'll call it net profit before tax. Why before tax? Because interest has now been deducted from it. The rate of tax is 50%. So deduct tax out of this. Tax would be 50% of 3 lakhs, which is equal to rupees 1,50,000. So students, when we deduct this value, the answer would be rupees 1,50,000, and this is net profit after interest and tax. So here we have calculated the numerator part, that is net profit after interest and tax is 1,50,000. I will put it as equation number 1 or figure number 1. The second part involves number of equity shares. Now students, how do we calculate it? Equity share capital is given to be rupees 5 lakh. Equity share capital is equal to rupees 5 lakh. And we are also given that the value for each share is rupees 10. So number of equity shares is equal to 5 lakh divided by 10, which is 50,000 shares. So now we have number of shares as well. We have both the components, number of shares, that is 50,000. I will mark it as figure number 2. And before this we had calculated net profit after interest and tax, which was rupees 1,50,000. So now our earning per share would be EPS is equal to net profit after interest, tax and preference dividend upon number of shares, which in this case is 1,50,000 divided by 50,000, that is rupees 3 per share. That means for every share we are earning a return of rupees 3.